Good morning, you're watching Market Cafe on ET Now with me Shreyansi Singh and my co-host Lisa Fernandez. Over the next 1 hour, we will take you through news and updates within the country and across the globe. Good morning, Lisa.
Very good morning.
Truncated week for the US market, so how are you looking at the global handover?
Right, so not much action. The US market, as we know, it's shut on account of the Thanksgiving Day, but it will open today on the back of it's Black Friday, and it will be open. But it will be a shortened day of trading for the US market. But let's move on to the European market. There's some action out there. So the European market, it closed higher, and this was despite the weak data coming in from the Eurozone front, because the Eurozone employment, that fell for the first time in nearly 3 years, and even the business activity, that continued to decline. But the UK data, that looks a bit upbeat, because the business activity out there, that defied expectations, and it returned to growth in November. So despite all this, the European market that closed higher. The DAX, that was up 0.2%. FTSE, that was also up 0.2%. Even Stocks 600, that was up 0.3%. So that was largely, there's no US market, there's no data coming in from the US market. But I think all the action is happening on the crude and commodities front.
Absolutely. So it's very interesting what is happening with crude, because it has been a little bit of a choppy week. And when you look at oil prices, they were largely flat on Thursday after OPEC Plus postponed a ministerial meeting, stoking views that the producers might cut output less than earlier anticipated. Now, when you look at Brent futures, they fell 54 cents to settle around that $81 a barrel mark after falling as much as 4% on Wednesday. When you look at US WTI, that also settled unchanged around that $77 a barrel mark, where it's been fairly steady. And when you look at the declines earlier this week for WTI, they were around 5%. Now, trade was expected to remain muted due to the Thanksgiving holiday. And in a surprise move, the Organization of Petroleum Exporting Countries and Allies, including Russia, delayed the meeting to November 30th, where they were expected to discuss oil output cuts. Now, the questions over OPEC Plus supply come as data showed US crude stocks jumping by 8.7 million barrels last week. This was much more than anticipated, because the build that they were penciling in was around 1.6 million, according to analysts.
Well, now also let's look at what are the cues for today. And starting with the US market, we have the S&P Global Manufacturing PMI data that will be released, and as I mentioned earlier, it's a half day of trading for the market on account of Black Friday. And back home on the IPO action, there's a lot of action out there because there are companies like Gandhar Oil Refineries, Tata Tech, as well as Fedbank Financials, Flair Writing, all this will be closing for subscription today. On the corporate action front, PNB Housing Finance, they'll be mulling the issuance of NCDs, as well as for GNFC, it's the record date for the tender buyback. Yesterday was the last day to buy the shares to be eligible for this buyback. And it's also the last day to buy SEPC as well as Talbros Automotive to be eligible on the dividend front. And on account of the fundraising, we have Ganesha Ecosphere, which will be mulling a fundraise. The board will be meeting today on the back of this fundraise, as well as Maruti Suzuki. They will be mulling the allotment of shares on preferential basis to Suzuki Motor Corp. So that's all the events on the corporate action front. Well, on the other events, we have Christine Lagarde, who will be attending the EU 20 Plus town hall, and all eyes will be on that front too. Shreyansi.
Well, absolutely, Lisa. Let's also get you the details of the Qatar-led temporary truce deal between Israel and Hamas. The hostage release is set to begin at 7 a.m. with the first group of 13 hostages, who will be released at 4 p.m. starting today. The deal will last 4 days, with Qatari authorities adding that they expect the warring sides to adhere to the terms of the agreement. As per the deal, both sides have agreed to the release of 50 hostages held by the militant group in exchange of 150 Palestinians held in Israeli prisons. The deal is also expected to allow aid into the Gaza enclave.
And staying with the news, meanwhile, the war in Gaza has sparked clashes on the Lebanon-Israel border, and militant group Hezbollah has fired as many as 50 rockets at military posts in northern Israel. And this attack comes a day after an Israeli airstrike on a home in Lebanon. It killed 5 of the group's senior fighters.
Well, shifting focus then, Central Bank of Turkey has once again raised their interest rates by 500 basis points to 40%, which was double the street's expectations of 250 basis points. This move seen in light of their relentless effort to curb double-digit inflation and the falling lira. Remember, inflation in the country came in at a 61% mark for the month of October.
And now shifting focus to the world's third largest economy, Japan has seen a rise in its core inflation to 2.9% for the month of October. And the headline inflation rate that has come in at 3.3%, accelerating from the 3% mark on a month-on-month basis.
Barclays is reportedly planning to save as much as $1.25 billion. The said plan may involve cutting 2,000 jobs, mainly in the bank's British back office. Now, the cuts would form part of an overall target of reducing expenses by up to £1 billion across the group over several years. The move seen in light of their efforts to cut costs and ramp up profitability.
And now moving on to some interesting data that we are tracking this morning. The global smartphone sales that has risen in October, and this is after declining for 27 straight months on a year-on-year basis. So a rebound has been seen on that front. Now, according to data from the Counterpoint Research, retail sales volumes that was up around 5% on year-on-year basis in October. And this growth has been largely led by the emerging markets. Welcome back to the show, and Shreyansi, one big threat is from the deep fakes, that's causing so much of threat and nuisance actually. So now as we delve into the growing concerns as AI-driven deep fakes take center stage in the political arena, following recent instances involving prominent names like Modi as well as Mandana, the government is now set to establish new regulations to address this deep fake threats. So Union Minister Ashwini Vaishnaw convened a meeting with social media platforms, AI companies as well as NASSCOM and experts in the field to discuss this grave issue. So the primary focus was to address the deepfake challenge through initiatives related to the detection, prevention, reporting as well as awareness. And Google has assured that they are actively working on building the guardrails against this evolving technology. So let's listen in to what the IT Minister and Prime Minister Narendra Modi had to say on this.
Deepfakes have emerged as a new threat to democracy. So that's why we need to take very urgent steps to strengthen trust in the society and to protect our democracy.
एआई के नेगेटिव यूज को लेकर चिंता बढ़ रही है। भारत की स्पष्ट सोच है कि एआई के वैश्विक रेगुलेशन को लेकर हमें मिलकर काम करना चाहिए।
Well, my colleague Sumita Karir is also standing by with more details. Sumita, what kind of regulations are in the works right now?
Big news coming in from the world of tech in response to growing concerns over the threat of AI-driven deepfakes. Union IT Minister Ashwini Vaishnaw convened a meeting today with social media platforms, AI companies, NASSCOM and experts in the field to address the deepfake challenge. The minister said that the centre will soon bring a new law or make amendments to existing laws to tackle the increasing concern around this technology. He also added that creators of deepfake videos, in fact platforms hosting them, would be penalized as well. Within the next 10 days, he said that we'll come up with a clear, actionable plan. Or based on 4 pillars. These 4 pillars are: number 1, detection of deepfakes; number 2, how to prevent the spread of deepfakes; number 3, how to strengthen reporting mechanisms; and number 4, awareness of deepfakes. So the next meeting will happen on December 1st for further follow-up action and what all should be done as part of this draft regulation, which the government said that it will start drafting shortly, and within a short frame of time we'll have that regulation to counter deep fakes in just a few weeks. He also said that the advisory that was given out to social media platforms a couple of days back after deep fakes of actresses came out has been taken very, very seriously. In fact, companies themselves are saying that this space needs stringent regulation. He also ended the briefing by saying that free speech and privacy are important constructs for India, and deep fakes clearly undermines these. Remember, this is coming after just last night, Prime Minister Modi at the virtual G20 conference also made a mention of what the challenge this technology of deepfakes presents to people, to citizens.
Well, thank you, Sumita, for taking us through that details on deepfakes. But moving on, the NBFC Association FIDC, they have penned a letter to the RBI expressing concerns about the recent surge in risk weights on bank loans to NBFC. And my colleague Ankur Mishra is joining in with more details on this.
So, the Association of NBFC, that is FIDC, has written to Reserve Bank of India. And one thing I would like to clarify here, that there is only one part of Reserve Bank of India's circular which has been requested by FIDC to be considered by the regulator. That is the bank loans which are given to NBFCs. So in the defense of NBFCs, it has been said that since NBFCs cater to MSMEs and NBFCs cater to the sector where banks also cannot reach sometimes. Therefore, it will affect that part of the credit growth. Apart from that, the association has also said that the intention of increasing the risk weight assets is, of course, to enhance the scrutiny. That is all welcome. But the problem here is that it is going to increase the cost for NBFCs and as well as source of funding. So all in all, it has been said that that it would redirect the credit flow towards the capital expenditure and aid a greater degree of funds towards meeting the working capital needs. That should have been the idea. But however, the Reserve Bank's direction needs to be reevaluated in the opinion of NBFCs, and they have requested Reserve Bank of India to restore the risk weights which were earlier for bank loans which has been given to NBFC. So that request has been made to Reserve Bank of India. Now it will be up to Reserve Bank of India to decide that whether or not to cater to this demand.
Well, thanks, Ankur, for those details. Onto an ET Now exclusive now, and there's buzz around market coupling of power exchanges, and the Power Ministry is mulling over regulatory aspects about this. Prakash Priyadarshi is standing by with this report that he filed earlier. Listen in.
Learning from our sources that the government is looking at various regulatory aspects before implementing market coupling of power exchanges. We are given to understand that Power Ministry is of the view that it's a very positive development for this sector in the long run. Therefore, government is moving ahead with the previous plan. Sources are saying that it is very unfair to say that the government has put on hold this whole proposal. However, it will take sufficient time to understand the legalities and all the aspects around it, and based on that, future course of action would be decided. When it comes to implementation of this whole proposal, we are given to understand that the government is planning to implement this proposal by next year. But before that, all the legalities and the aspects around it will be examined. Also, the consultations and the discussions that is taking place will be taken into account. An objective behind this whole proposal is to provide level playing field to all players, and uniform price across power exchanges is something which will help government to increase overall electricity trade at power exchanges.
Well, thank you, Prakash, for taking us through and giving clarity on the market coupling on power exchanges. But moving on to the FMCG sector, channel checks is suggesting that ITC cigarette volumes that will grow in Q3 despite the high base. BNK Security is also seeing strong margin improvement in Q3. Well, Vinny is joining in with more details. Vinny, what does it mean for ITC? What is the volume growth expected?
So absolutely, in terms of what BNK Securities is highlighting, according to the channel checks, that cigarette volumes for the company will see a reasonable 5 to 6% growth in Q3, and this is despite the high base that they've seen. So on the higher base, also we're expecting good growth in cigarette volumes. They have been, doing much better than what we saw during COVID levels. So obviously, better cigarette volumes expected to still continue for the company. Margins for the cigarette business also expected to remain strong and improve sequentially as well. Other than that, the FMCG business also is expected to see good growth as well in terms of the margins, and mainly due to the expansion that is in terms of the cost management initiatives that the management has taken. That will be something that will be supporting the margins also for the FMCG business as well. Seasonally strong quarter obviously for the hotels business in Q3, so that will be supporting the growth there for the company. They expect a 10% growth in Q3 from ITC, and Q3 promises a double-digit growth rate is what BNK Securities is highlighting. They're maintaining a buy and a target price of 585 rupees per share for ITC.
Absolutely. Thank you so much, Vinny. We'll definitely be keeping an eye out for ITC. Now, it has been an IPO-heavy week on the Lal Street, and the markets have seen an unprecedented bull wave. Now, we have had 4 diverse players entering the primary markets. As of 7 p.m. last evening, the IREDA IPO closed after being subscribed to nearly 40 times. Now, the overall subscription figures for the Tata Tech IPO on day 2 stood at around 14.8 times. Subscription figures for Flair Writing Industries stood at 4 times as of 5 p.m. yesterday. Meanwhile, when you look at Fedbank Financial Services, the IPO was subscribed to around 0.9 times. So that is the IPO update coming in. But with this, we're timed out on this segment, and we'll see you on the other side. Welcome back. Thank you so much for staying tuned in. Let's switch focus to the greed and fear note coming in from Jefferies. Now, when you look at removals, they've removed Bajaj Finance. In terms of allocations, there's a 4% allocation for JSW Energy, and they've also raised their allocation to Zomato by 1 percentage point. Now, when you look at the India long-only portfolio, that in terms of increases by 1% point, you've got JSW Energy, AU Small Finance, as well as L&T. And in terms of cut by 1% point, you do have Bajaj Finance, ONGC, as well as Reliance. So that is largely the snapshot of the greed and fear report by Jefferies.
And let's look at Axis Bank will be in focus today because they held their analyst day and a slew of brokerages, they have come out with reports on Axis Bank. So let's start with Jefferies. Now for Jefferies, Axis Bank is the top pick for them, and they say that Axis Bank has an 18% ROE with better asset quality, and the RBI circular that came up recently, that has limited impact on Axis Bank, as Axis Bank has no need to raise further capital, and also the strong deposit franchise bodes well for Axis Bank. Moving on to Macquarie, has according to them, Axis Bank has seen improved deposit quality. The deposit franchise that is expected to ramp up in the next 7 to 8 quarters, and also the consumer as well as NBFC loan price hikes that is expected to pass on the risk impact. So no immediate price hike, but over a period of time, the cost ratios that may remain high in the near term. Now moving on to Motilal Oswal, they are also quite positive on Axis Bank. The key focus area is a comprehensive digital journey, which will be enhancing the customer experience, as well as they expect a 4 to 6% higher growth for Axis Bank compared to the overall industry, and they also expect that the cost asset that is expected to moderate by around 2% by end of FY25, and also Axis Bank is expected to deliver good return ratios. Moving on to CLSA, they have also they have left the target price unchanged, but they see growth, profitability as well as sustainability strategy that is on track, and they are also keeping emphasis on the partnerships, Bharat Banking as well as the other key growth levers, which is the deposit, which is a key focus area for Axis Bank. So that's all the brokerages they are talking on Axis Bank, as well as Axis Bank will be in focus today.
Well, absolutely, Lisa. So Axis Bank is on Jefferies' radar, but they're also betting on the India story amid strong earnings growth and abating macro concerns. It has also made some changes to its model portfolio, and Vinny is standing by with more details.
So absolutely, we're seeing Jefferies has come out with an equity strategy note for the model portfolio. Now, what they're highlighting for this model portfolio, they're deploying some more cash over there. What they're liking actually is that the near-term concerns are now abating, the macro concerns. They've raised cash tactically in order in their model portfolio in early September. They're seeing strong earnings growth that is making India quite attractive, and looking in terms of attractive in terms of the valuations are looking reasonable as well on PEG ratio basis, that is the price equity growth ratio basis. Other than that, what they've done is now in this model portfolio, they're replacing Maruti with an Eicher. They expect the two-wheeler industry in India to actually outperform the PV industry for over the next 2 years. So on the back of that, they're replacing Maruti with an Eicher Motors. In the power sector, the power space, they're expecting NTPC to do better than Power Grid. Both the companies is what they like, but they'll replace Power Grid with NTPC in the model portfolio. In the consumer side, they would replace Marico with Honasa Consumers, given the strong growth that Honasa Consumers is seeing, and they're expecting to deliver the 30% growth going forward as well for Honasa Consumers. So yes, that is why replacing Marico with Honasa Consumers. Coal India also is something that they are adding, given that coal's volumes growth trajectory has improved amid India's strong economic growth as well, and they've shifted weightage from NBFCs to HDFC Bank and an ICICI Prudential Life as well. So that's how the changes that they're making in their model portfolio. That's the word from Jefferies.
Yes, Vinny. So that was, thank you, Vinny, for taking us through that Jefferies note on India. India is also in big focus across the brokerages. Now, moving on to the stocks that will be in focus today. And the first stock, that is Lupin. Lupin will be in focus because it has received approval from the US FDA, and that is for bromphenic ophthalmic solution. And it is the first to file. So Lupin is eligible for 180-day exclusive period. So this solution that has estimated annual sales of around USD 185 million in the US, and along with that they have also received tentative approval from US FDA, and that is for canagliflozin lozenge tablets, and this product will be manufactured at Lupin's Pithampur facility in India. So yes, this has this drug, it has estimated annual sales of around USD 561 million in the US. Now moving on to NMDC, that also will be in focus today because they have come out to their prices. The prices of iron ore that has been fixed, the lump ore prices that is at around 5,400 rupees per ton, as well as the fine prices that is at around 4,660 rupees per ton. Now, moving on to IHCL, the company has invested around 55 crore in the equity shares of Genis Hospitality Private Limited and 35 crore in the equity shares of Curio Hospital Private Limited, and this is by way of subscription to the right issue. Now, both are the wholly owned subsidiaries of the company. Moving on to Radico Khaitan, that company has launched a unique pink vodka to cater to the growing demand of the colored as well as flavored category, and it is a significant addition to the Magic Moment family of vodkas. So yes, those were what's on my radar. What's on your radar, Shreyansi?
Yeah, absolutely. So Karnataka Bank will be in focus because the company is tied up with Bajaj Alliance Life Insurance to distribute life insurance products. Now, this collaboration is designed to leverage the strength of product capabilities and Karnataka Bank's large customer base with wide distribution of over 900 plus branches across the country. Now, when you look at JSW Steel, that one will also be in focus because they've completed making the entire investment of 750 crores in JSW Paints. Now, post this allotment, the company will be holding 12.84% of the issued and paid up equity capital of JSW Paints. Vishnu Chemicals will also be in focus. Now, they've incorporated Vishnu International Trading FZE, a wholly owned subsidiary in Dubai, And the main objective of the new subsidiary is to distribute, transmit, and sell chemicals. So that largely is the roundup of the stocks that you should keep on your radar. But Ansh is standing by in the studio. Ansh, what is the futures and options roundup looking like to you right now?
Right, let's start with Nifty first. So bears continue to sit in the 19,850 to 900 zone, and Nifty also continues to consolidate just below it for 7th consecutive session. Now let's see what happened in FNO segment. Open interest increased by 3.7%, but prices remain flat. Saying that this is the neutral stance in the market by them. Whereas on option front, we saw very active call writing at 19,900 strike. Yesterday it was at 20,000 strike, now it's 19,900. So the room for market to move upward seems getting shorter. On downside, we saw active put writing at 19,800, which gives some positivity in the market to take support over here. Now let's shift our focus to what FIs did. In index futures, they covered 3,000 long contracts and they added around 2,200 short contracts. So net to net, we are seeing a position of 5,200, 300 getting added on downside, which is kind of a negative, due to which total long positions fell back to 21% from 23%. The FII long positions have been in this range from 18 to 23% from last 10-12 sessions. So even they are consolidating in the same range. So in a nutshell, overall data seems cautious, but again the same bottom line. Nifty has to decisively close above 19,850, 900 level to overcome this bear zone.
Well, so cautious data coming in from Ansh. Thank you, Ansh, for taking us through that FNO snapshot. But now let's shift focus to the pharma sector. Now, Bernstein has come out with a positive note on pharma sector. They say that the improved pricing volumes of US generics that is being witnessed, and after a slow acute Q2 that was witnessed, they expect recovery in Q3, and because they see multiple tailwinds for the margin. However, they don't see any earnings surprise headroom in the near term, and they expect range bound sector at similar valuations, because most of the stocks they are trading at higher than long term averages. Because if I look at they are quite constructive on Dr. Reddy Labs as well as Sun Pharma, Alchem Labs, and they believe there is room for correction for stocks like Lupin as well as Divis Labs, and overall they like companies like Cipla, Aurobindo Pharma, Biocon as well as Gland Pharma.
Well, absolutely. And Mark Matthews, who's the head of investment research at Julius Baer, also sees Indian earnings in high teens over the next few years. He also shares that the sector, he also talks about the sectors that he's bullish on. Listen in to a slice of that conversation.
I do feel that the United States is the best market to invest in equities and, by the way, in bonds. And there are many, many reasons for that that have nothing to do with GDP growth, of course, because in the United States, GDP growth being a mature economy is relatively low. But we should have figured out by now, looking at China, that there isn't really a correlation between GDP growth and stock market performance. And in America, I think what it comes down to is simply that the technology sector is the largest sector in their stock market, and it has returns on equity in the mid-20s, sometimes even in the 30s. It's an incredibly profitable sector, and they just have the ability to invent and create great new things. And so I think with generative AI, we're on the cusp of that all over again. I was just thinking this morning how back in the 90s, I didn't know anybody who was working in the technology sector, apart from a cousin who worked at IBM. And now I have many, many friends in the technology sector. And the reason is because those magnificent seven, they didn't even exist back in the 90s. And I think that with generative AI, we're on the cusp of a whole bunch of new technology companies. They probably don't even exist right now. But they will over the next 10, 20 years. They'll rise and become big. And that's something that you really see only in the United States.
Mark, hi there. Morning. What's the outlook when it comes to the earnings growth potential as well for India? What is it that you're forecasting versus the rest of the world?
Above average. So in the high teens, potentially low 20s. And you're right that it's good. So I was just talking about the United States, but absolutely the appeal of India is the earnings growth. And I think that's being driven by, in part the strong economy, but also the resilience of the banking sector after years and years of taking that painful medicine of writing down the non-performing assets is now in a place to lend. We've got a capex cycle, I think that's undeniable, and it'll continue. And the banks are the biggest sector in the Nifty.
Mark, now the biggest moving part in last 12-18 months has been how long interest rates will move higher and when will they hit a roof. Assuming that interest rates is not a moving variable for 2024, but elections are or will be, both for India and for United States, two largest democracies would be voting. What kind of volatility do you think it will create?
Well, I have to politely disagree with the way you've asked the question, because I don't think that politics are a defining factor of the market. They never really have been. You might remember in the lead up to the 2016 election, people were terrified of Donald Trump. Well, we ended up having great stock market performance during most of his administration. It wasn't really until the very tail end when the pandemic came along, and that wasn't his fault. So I really don't think it matters that much who wins the US presidential election. And in India, I don't think there's going to be actually much chance of the opposition coming in. I prefer to focus on the earnings growth in both places, and I think in both places it'll be good. So I mentioned India will be high teens, but we're probably looking at low teens. So I'll just put out a low number of 11% earnings growth in the United States next year and the year after. It's hard to see the market go down if you've got double-digit earnings growth.
So banking is one space that you're looking at positively, but how else are you playing the India theme? Is consumption something which is on the anvil? Real estate has been doing well. Have you been dabbling into any of those names?
Yes, very much. So real estate we would play through building materials, which also benefit from the infrastructure spend. The consumer is definitely a good story in India, which would benefit from the rising GDP per capita. Ernst & Young think that GDP per capita, which is about $2,600 today, will be $3,700 by the end of this decade. We would like to play that through the automotive sector. And then we like pharma, because it looks like the price pressure in US generics is coming to an end. So there's several other things, but to go back to what I said originally, the banks, I think, are, as simple as it sounds, a good way to play the fact that you have a capex cycle after many years when the corporate sector really was starved of capital because it couldn't get loans, and now it can. So to me, that just kind of, I hate to use the term, but it just kind of looks like a no-brainer.
So that was Mark Matthews' view on India. Quite a positive view coming in for India and the many sectors that he's bullish on. But let's shift focus on Supreme Industry. That company will be in focus on the back of their management meet with Nuvama. Now, the company, they have expressed confidence on overachieving greater than 15% volume CAGR over the medium term. So let's go across to Sharad. Sharad, what are the other takeaways coming in from Supreme?
In focus, we are having Supreme Industries, and the stock, by the way, over the last 2 months has been on a flattish note, but over the last 6 months, the stock is up almost 50-odd%. Recent management meet was there from Nuvama, and they have stated that the company is poised to gain in because of the two factors, the increase in affordability and also in the volume revival. Now, they have also upgraded the stock to buy from hold, and the target price is set at 4,959 rupees per share. And important takeaways include that the company is confident of clocking more than 15% volume CAGR over the medium term despite having a high base. Also, the other segments are expected to return between 10 to 15% CAGR going ahead. An important commentary coming in, especially on the high margin business front, as they'll be focusing on value added products, whereas they have given a 17% plus EBITDA margin target and also post-tax, pre-tax ROC numbers of almost 25%. Lastly, they have also pointed out that they have increased the FY24 capex guidance, and now the guidance is coming for capex at almost 1,000-odd crore rupees, and this is coming in after the recent takeover, and the funding will happen from the internal accruals. So strong guidance coming in, especially on the capex front and the value-added portions front for Supreme Industries.
Well, thanks, Sharad. With this, It's curtains down on this edition of Market Cafe from me, Shreyansi Singh, Lisa Fernandez, and the entire team who put this show together. Stay tuned for the market.